Good day, viewers. You're welcome to yet another episode of Money Wise. Remember, the goal is to get rich come 2026 and beyond. Today, we'll be looking at a very interesting topic, which is which stock should I invest into? A lot has been said about buying of stocks. Today, some persons buy stocks for capital appreciation. They buy a stock today for 20 naira per share. Perhaps the company is performing very well. The share price rises to maybe between 30 or 40 naira per share. They sell and get capital gain. Others buy stocks for purpose of getting yearly dividends. Purposes varies. But then, whatever the goal is, there must be a driver. Something must prepare you to decide to purchase the stock of a particular company. That is where the issue lies. So many persons today I've interacted with are finding it very difficult to know which particular stock to invest into. Little wonder we have investment experts that are paid handsomely in order to guide people through the storm of deciding which particular shares they should purchase and which shares they should not purchase. That's why today in this channel, we're taking it upon ourselves to actually teach you which stock to buy and which stock not to buy by giving you the fundamentals, helping you to get the fundamental understanding of where to actually cast your net and where not to what cast your net. So generally there are two approaches, the fundamental approach and the technical approach in understanding or coming to a decision as to which stock to invest into and which stock not to invest into. We're looking basically at the fundamental approach or analysis. But then I'll just do a general overview of what technical analysis involves. Basically, the technical analysis is involved, looking at the balance sheet of the company or the income statement, doing some financial analysis to understand the trends and how the company have been performing over time. That will give you an insight as to the future viability of the company. And then you can actually decide to say, okay, yeah, I think it's a good one for me to invest into or not. But then we'll be focusing more on the fundamental approach because that is what everybody, irrespective of whether you can do technical analysis or not, that is one everybody can actually what make do of and come to a reasonable conclusion as to which stock to purchase and which stock not to actually what put your funds into. So what is this fundamental approach? It basically revolves around three, four, five, or six things. But we're looking at just two or three today. And I believe that it's going to be helpful to us all in deciding where to what put our funds into. Number one, when it comes to fundamental approach, you're talking about things like the company news, public perception. You see, public perception drives the value of a company shares. When a company is performing very well and there's this public perception that this company is doing very well, the first thing you notice is that the share price of that company in the stock exchange will gradually or continually be on the rise. So it's as simple as ABC, public perception. How do you get to know if your company is doing well from public perception? Yet every now and then on the media, yet over on your own, you can actually go online and do some research about this particular company to know how they are performing. Okay, what has been their financial performance over the past 3, 4, or 5 years? Google is your friend. Google will tell you how this company has been performing over time. And based on that, you can actually make a decision as to whether you purchase that company shares or not. Yes, public perception or company news is a viable way of deciding whether you would invest in a company stock or not. Yes, because good news does not lie, neither does bad news also. So when you go online, you research about the company, you get to know how the company has been performing over time. It will give you a hint as to the economic viability of that particular company. Then what about market share? Yes, market share is a very good indicator as to the viability, the financial health of a particular company. There's so many industries. We have the fast moving consumer goods industry, FMCGs, and their companies operating in that space. We have the banking sector, and their companies operating in that space. It is very simple. Google is your friend. You can go online and say, okay, give, give me the five top company in this particular industry or sector. It pops up. And based on that, you see that your search has been narrowed. And when your search is narrowed, it makes it easier for you to decide which company to invest in that particular sector or industry that you're actually interested in. Then the next one we can also look at is brand recognition. This particular brand, this particular company in a given industry, are they highly recognized? Are they doing very well? It's easy to know. So brand recognition is another way you can tell if a company is doing very, very well. So far we've looked at three things: public perception, brand recognition, and also market share. You don't need any technical expertise to be able to do either of these three things at all. Google is your friend, like I said. You can go online, Google about a particular company to know their what performance. What are people saying about the company? What is their market share, in that particular industry? And of course, brand recognition. Is that brand recognized? So these are one of the points or indicators as to what the economic or financial viability of the company. And of course, this can give you a header or an indication to the fact that a company is actually doing very well or not. And remember, do not forget to diversify your portfolio. In fact, that will be the topic of our next video: portfolio diversification. What is portfolio? Let me give you a brief intro. Portfolio is like a basket of what investment where you have various investments into. So in our next video, we'll talk about this: how do you diversify your portfolio? Why should you diversify your portfolio? Why should you not put all your risks in one basket? Thank you very much for having me today. And please remember to click the like button and also subscribe. And then turn on your notifications so that when I drop my next video and every other subsequent videos, you get what? Get the notification first, and of course, listen to my video as what learn together to grow rich come 2026 and beyond. Thank you very much, my viewers. And remember, I am Michael. I love you so much.